to explain on those topics one by one as mentioned in the agenda today. Yes. So the first point in our agenda is the pre-open session in the equity derivative segments. So just to give a background on this subject, so there was a SEBI circular which was basically proposed to introduce the pre-open session for the derivative segment, specifically for index and stock futures, which will be similar to the equity segment. So here, the go live date, which is a mandatory go live date, it will be effective from the Monday, which is 8th of December 2025. And in the scope, if you see the scope, which all contracts would be eligible for the pre-open session? Firstly, all the current month future contracts, which will be for both indices and stocks, those would be applicable. Along with that, before the expiry, within the last 5 trading days, even the mid-month contracts, future contracts, they would be applicable. So these are in the scope. So these future contracts shall be eligible for a pre-open session. All the modalities, timings, and the pre-open session behavior would be similar to equity. And in this point, the exclude, what are the exclusions are basically the calendar spread future contracts and the option contracts, they would be excluded, which will be not in scope for the pre-open session. And also on certain corporate action where there is basically what we say scheme of arrangement, which is a demerger, which means that if a particular underlying, it is in the equity segment, it is undergoing a price discovery, then on that particular day, the derivative contract for the future contract will not undergo a pre-open session. So this is an exclusion. And as I mentioned earlier, the pre-open session timings will be similar to equity. The order entry period, which is currently for equity segment, same timings would be applicable for the equity derivative segment. That is from 9 a.m. to 9:07 a.m. will be the order entry period. The order matching would be between the 9:08 p.m. to 9:12 a.m. Sorry, 9:12 a.m. That will be the order matching session. In between that, there will be a buffer period between 9:12 a.m. till 9:15 a.m. And from 9:15 a.m., all derivative contracts as today would be eligible for the continuous session. Again, in this section, we will be seeing what types of orders. So all order types which are supported for equity segment will be similar to equity derivatives. That is limit orders, market orders, and validity orders such as EOS, IOC. Those orders will be allowed in the pre-open session. And the price discovery logic, that what is called as the volume maximization logic, again, it would work in a similar way as per the equity segment. From a member perspective, in equity, whenever there is an auction session happening, indicative price and indicative quantity, those are being disseminated. So in derivatives also, member would be able to view these values during the auction session. And whatever, so both indicative quantity and indicative price, those would be displayed. The next slide covers the risk controls. In risk controls, again, it will be similar to the equity segment, where we are saying that self-trade prevention check, which is a risk parameter, it would be applicable during the pre-open session, whereas the other parameters, such as the market price protection impact, limit price protection, price reasonability check, reverse trade prevention check, those would not be applicable in the auction session. Again, all the orders which are placed during the pre-open session there would be a margin validation check against the available collateral. The next section covers the identifier. So members, so this information, what all contracts will be eligible in the pre-open session. In the contract file, there would be a separate identifier which would specifically with a flag, it will identify that whether the instrument or contract is eligible for the pre-open session. So if I take an example here, so in this, there will be a pre-open session indicator, which will be a new field in the CO file, which will have a description value. If it is 0, which means contracts are not in pre-open, not eligible for pre-open. And if the value is 1, it indicates contract will be eligible for pre-open session. For members to identify such contracts in the contract file.
The field number 15 has been new field.
So it's a existing field in a contract master, where if you right now it's a filler field. Now we are going to use the same field to populate the pre-open session indicator.
There's no change in the file format.
There's no change in the file format structure.
Already field में भी गया था.
So whatever has been said, we have published the same information via different circulars where exchange has provided this information in detail, for which references and links have been shared.
Example on volume.
Also, on the volume maximization part, wherein similar detailed explanation regarding how the price matching would happen, price discovery would happen on various different scenarios are explained in detail, for which link is shared, which is available in the BSE website. As well as in the FAQ section also, there are a lot of different points which are covered in terms of all the different types of questions which have been mentioned in the website. So the next topic.
So hello everyone. So next topic is reserve contract. So introduction of reserve contract in equity derivatives for Sensex and banking. So this is Omkar from BSE Trading Development Team. This reserve contracts will be introduced only on options in Sensex and banking. So currently, so reserve contracts will be the additional strikes which exchange shall be creating and providing in a contract master once this functionality is made live. And as and when there is an intraday movement during trading hours in the underlying, and based on the direction, if it is upward or downward, the reserve contract will be made intraday activated for trading. So the purpose of reserve contract is it will be an additional contract which will be added in a contract master file, and based on the underlying movement, these contracts will be activated. Further, if once these contracts are activated by exchange, then till the expiry, it will remain active and available for trading. So similarly, we contract master of exchange, which we provide on daily basis, there is an identifier which we have provided. So to identify which are the reserve contract, which are the non-reserve contract, so that front end or members can, it's a front identifier which is available for member to identify. Additionally, whenever this intraday contracts are activated, there will be a message which will be disseminated by exchange to the front end or to trading application who are connected, and they can use that message to show the appropriate message on their front end.
So they need to do the appropriate development in their API to read the message.
Correct.
Otherwise, if they have not done, they will not be able to get the message properly.
Yes.
New message in API, so which was published in the circular earlier, and front-end trading application will need to handle it so that they can easily identify during the trading hours whenever the contracts are activated from the exchange side. and they can immediately start quoting in those options.
So typically there are two developments which are required. One, in an ETM message when the intraday activation message is received, and other is the identifier what we have introduced in a contract master. So next slide talks about the file name. These are the file names of contract master files which exchange provide right now for equity derivatives. So these are typically end of the day files which has all my contract futures and options contract details applicable for next day. And if you refer the field number, so these are the field number 12 and field number 8. So all currently these fields are filler field. Now we are going to use this filler field to provide this identifier. So if you check the field description in the PPT, so 0 will be the active contracts and 1 will be the reserve contracts. So all the reserve contract will be provided under this identifier, and once the intraday movement happen, the exchange will activate same for trading. We have provided the circulars links here for more details. So these are the two circulars what we have already issued to the market for more clarity.
Yeah. So the next topic, again, it's an SEBI mandate, which has already gone live. Yes. So this SEBI mandate with respect to the kill switch mechanism. So just to give a basic understanding, what is a kill switch mechanism is basically a feature in which a member has the ability to basically invoke a request to stop orders emanating from a particular algo ID. Currently, this feature is only applicable for the retail algos which are registered with the API facility. So kill switch, basically, what is a kill switch? The kill switch comprises of two actions. One is to cancel my pending orders, which are there in the book. Second part comes to reject all the further orders. System should reject all my orders which are emanating from a particular algorithm, for which I want to stop the trading, halt the trading activity. So in this part, when I want to cancel the pending orders, this facility currently has been provided to the members in the RT ZT RTRMS terminal, which is basically the member admin RMS portal. And in this, from that system, member has the facility to cancel all the pending orders. For cancellation of the pending orders, member has to select a specific algo ID and a session ID. Basis the algo ID and the session ID which is selected, all the pending cancel orders would be cancelled from the system. And coming to the second part, if the member wants to stop further orders which are emanating from the particular algo ID, he has to just enter the algo ID. All the orders which are coming from that algo ID would get rejected by the trading system. Also, there is an additional facility in case of intraday member wants to revoke the algo IDs which have earlier been stopped. So that revoke functionality is also been provided at the algo ID level. In case member wants, now the orders from the algo ID should be accepted by the trading system. All these features, which the facility which the member has, would be valid only for that particular day. And if the member wants to use this facility for multiple days, he has to initiate the request on a daily basis.
Now, one word of caution here, that this particular functionality should be used only in case any of your algos have gone into malfunction. It's not a routine cancel or stop order functionality. Should be used only in case of emergency, wherein I repeat, an algo has gone into malfunction. Otherwise, you should not really use this facility.
Yes. So whatever details with respect to the kill switch functionality, Exchange has initiated the circulars. All the references has been provided in the provided links, where more details with respect to the features, the facility, has been shared. Also, a user manual has also been attached as part of the circular, where the detailed process of initiating this process skill switch, where the RTRMS terminal has been provided in detail.
During the session of question and answer, we can demo this functionality also for better clarity. First, let the entire presentation be completed.
Okay, so we go to the next point, which is there in the agenda, which is the revised block deal framework. So currently, the existing block deal framework, which is block window, which for which the modalities are that my order, again it's a semi mandate, for which the modalities are my order should be placed within 1% of the reference price. That has been currently been revised from 1% to 3% with respect to the price range. Also, the order size, the minimum order size that should be allowed during the block deal has also been revised, which currently from existing 10 crores, which is the minimum order size, has been revised to 25 crores.
Now, this 3% price range shall be allowable subject to surveillance initiated price bands or any other actions on the particular securities.
Also, the above provisions shall also be applicable for securities which are under the optional T+0 settlement cycle, for which first block session is applicable. These changes are proposed to be live from Monday, December 8th, 2025 in the equity segment. In parallel, these changes are already available in testing, which members can test in simulation environment. Also, this would be available in the mock session, which is scheduled for the December 6th, 2025.
Yeah, during the compliance mock in December.
With respect to this, the circular references mentioning the modalities of the revised block deal framework have been explained in detail in the provided circular links. Also, FAQ has been provided in the BSE India website.
The next topic is business continuity for interoperable segment of stock exchanges. So, with respect to circular dated 20th November 2024, SEBI has directed exchanges to implement a mechanism to ensure business continuity in case of outage at trading venue. So, what is the purpose? So, in the event of outage, so in case there is an outage at trading venue, so BSE shall act as an alternate trading venue for NSE. So, accordingly, exchange shall create. So, what will happen?
Vice versa also.
Or there is a problem at BSE, then for BSE, NSE will be the alternate trading venue. To make this facility or the functionality implemented, what both exchange has done, we have added exclusive scripts traded at each exchange as a reserve securities at BSE end. So these securities will be allowed for trading only when this business continuity is invoked at BSE end. So typically, in case there is a problem at other exchange and that other exchange inform BSE to invoke trading, in that case BSE shall be activating those securities which BSE has added, and trading in that security shall be activated. So this framework is already live with effect from 1st April. So I'll be taking you through the points of invocation of alternate trading venue. So what is a trigger? So affected exchange shall be, in case of there is an event of trading outage happening, then affected exchange will inform unaffected exchange that there is a problem, and then based on that, the unaffected exchange shall activate the trading. So the notification to member. So how member will come to know whether the trading has been activated? So this will be informed via circular or via message on a trading terminal.
And both exchanges will inform. Affected exchange will inform
Correct.
from their side, and unaffected exchange will inform about activation of trading of these exclusive securities and contracts.
So, under this framework, which are the type of securities which will be added by both the exchange? So, equity mainboard securities, SME securities, securities under SME rights, then partly paid up, and the securities under T0, but only exclusively listed on that exchange. So, for BSE in a script master again, all such securities has been added under a new group called as a NS and NT. So that is the identifier for members to identify. Similarly, for future and option segment, all the exclusive stock derivatives traded either at BSE or NSE will be added by other exchange. So who are the members or clients who can participate? So all register and active trading member of BSE and their clients. So in case the event happens at other exchange and BSE activates the trading, then in that case, all the registered trading member at BSE will be able to trade in those securities. Now, which are the applicable sessions? So interoperability is currently in equity derivatives and currency. So in equity segment, we have pre-open, so special pre-open, continuous block deal, post-closing. So all this session will be applicable, and in case the event happen, the trading will be started from in this session. Same with equity derivatives. Now pre-open session will be applicable and continues. And currency, we have only continuous session. These are the circular link what we have provided for reference. So these are the circulars what we have issued by exchange at the time of making this framework live. So this for reference purpose. So there is a upcoming event which is planned by both BSE and NSE for a member to test this. So at the time of going this live, this functionality was made available for testing. However, based on SEBI guideline, we are going to again make this functionality available for testing. So these are the dates. So one scenario is BSE outage. That means both NSE, BSE will conduct a mock, and BSE will, and there will be a BSE outage. That means BSE securities will be unable for trading by NSE. So that is that scenario will be conducted on 13th of December in equity segment. Prior notice shall be issued by exchange, and it shall be informed via notice also. And in the month of January, outage at NSE. So NSE plan outage will be conducted at NSE, and NSE will stop the trading at their end, and then BSE will be activating the trading of securities which as BSE has added. BSE has added at their end. So that date is 10th of January. So
request all members to actively participate, so that whenever during live trading, if and when, of course, we pray that such things don't happen, but in case of any such eventuality, the members and their front-end trading applications are ready to connect and trade from the unaffected exchange trading system. So we have two mocks, one in December 13th, and the other on January 10th. So request all members to participate in both the mock sessions and give us feedback on their participation experience. Apart from that, detailed guidelines are given related to if and when trading is invoked, what would happen to where will the trades be available, what kind of orders would be there, and the end of day trade files, what will be the impact on those. All of it is mentioned in the detailed circular, the reference of which is given here. We request all the participants to kindly go through these in detail, and if at all there are any questions related to that, we can take some questions here also, or even subsequently as per the contact details given in the circular.
Okay, thank you, sir.
Yunus,
So
we
now-
have another
Yes, sir.
update. Give us 2 minutes.
sir.
We have another update. Naved sir will speak.
Yeah, please.
Yeah, so this is an update on one of the new feature that PSC is planning to offer. It's already in a pilot mode, and very soon it will be available to all the members. This is regarding a drop copy of trades. So we already have traditional drop copy through the ETI framework, which is the trading interface framework, through which you get a drop copy, and it is available only to 0 and 200 ETI ID. And the entire member firm state comes to these two IDs. Other than that, there are other drop copy facility like OTD also available. Now there is, in addition to these two, there is a third drop copy facility which we are planning to introduce, which will be similar to what the drop copy you get it through the ETI framework. So in this drop copy, you will have to connect to a different system, and you can ask for the trades the way you ask for trades into the ETI. However, the difference is that here you can have multiple IDs to take the trades, and here you, in the new one, you can also have a filtering mechanism to say if you want to group a set of traders, or you want to grip or you want to only apply for drop copy of few set of sessions, you can do that. You can do filtering at the level of CP code also. So a specific CP code trades you need to divert to one particular ID, that also can be done. Such kind of filters can be applied, and subset of the entire drop copy can be availed through this facility. So this is what we are offering. I think a notice is already issued for the pilot use, which we are going to extend for more users. So your interest, if anybody has an interest, can respond to that circular to the given email IDs or the numbers mentioned in the circular, and you can look into that. So this is the forum I thought to introduce this new thing, just an idea of that into this forum.
So in addition to the existing drop copy facility for ETID, the additional feature of drop copy for the session IDs as well as for CP code, that will be made available, which is currently in the pilot phase and will be made live soon. Those members who are interested to test this facility, they can send the requisite email. We'll issue the details via notice for the market participants. Thank you, Yunus. We can now take
Okay,
the
sir.
question and answer.
Thank you so much, sir. And now we request participants to raise virtual hands so we can enable for talking and asking questions. So all the participants are requested, if they have any queries, you can please raise the virtual hand. Okay. So there is a question from Salim ji. Salim ji, you can unmute yourself and ask your query.
Hello, am I audible?
Yes, sir.
Yeah. The question is regarding the trading outage. If the consider the partial brokers are affected, then is it applicable, or that 100% that like outage should be there at the like exchange level?
It's not clear.
Hello.
Can you please repeat your question?
Hello.
Yes,
If
yes.
like if trading outage is happening for say for bunch of brokers, then is there any the trading outage is like considered for those brokers, or there should be like 100% outage at the like trading level, then it will be considered?
So this topic which we covered, it talks about trading outage in the exchange trading system, either
If you
at
mean to say
BSE or
100%.
Yes, that means exchange trading system is going down.
Entire exchange gone down. It is not concerned with the number of brokers.
Huh.
If exchange systems face some issue.
ठीक है. Uh, sir, like one more question, sir.
Yes, please.
Suppose suppose if we are having like client registered at only like one exchange, and
Hmm.
that is and there we are facing trading outage problem, then those clients are not registered at the other level, then is it can they be allowed to place the orders?
See, if those clients are not registered at the unaffected exchange where this alternate trading will be invoked, then you will not be able to trade for those clients. They have to be registered at both the exchanges to avail the benefit.
As per the 2023 SEBI circular, all UCC has to mandatorily at the two places, both the exchanges.
Correct. Compliant UCC should be there at both.
It's a broker's duty to register the client at both the places. Whether client trades at one place or not place, it's a choice of the client. But UCC must be registered at both the places.
Yeah, any other questions? If there are any questions, we request members to raise the virtual hands, please.
Chat में है ना?
Chat में. There are still questions.
Sir, there is a question from Om Prakash ji. Yeah, Om Prakash ji.
Yeah, hi, good evening, everyone. So my question is related to kill switch. The feature which currently you guys have proposed kill switch, that is for I just want to know understand that because this feature is already provided by some brokers, I believe.
Yes. So it can be enabled in the member trading system as well. And for the retail algos coming through the member APIs, now we have also enabled this facility through RTRMS ZT system.
Okay, fine. This is only I was asking for. Thanks.
Yeah, sure.
Okay, so sir, there are no raised hands as of now.
Yeah, there are some questions I think asked
few
in the
questions
chat
in chat
window.
box.
Yeah, we'll look at those.
Okay.
Yes, so we can see some queries which have been posted by members.
Client having one lot Nifty December future long at 5 December EOD, now the 8 December BOD BF.
Square of order, how will margin work? So this question actually we need to ask the clearing corporation where your member is registered. However, as we understood, clearing corporations would be doing margin sufficiency check for all the orders that are entered during pre-open session. But very specific with respect to your open position, I think this query should be redirected to the clearing corporation where the member is associated for clearing settlement.
मार्जिन तो इस पे लगेगा तो रीओपन में पता नहीं मैच होगा या नहीं होगा ना शेयर ऑफ कैसे मांगूंगा.
Correct. And and to add to it, this is going to be order level collateral check. However, at the end of the order entry session, if the order gets traded, then at the clearing corporation end, what they will do is the order level margin would be released, and again, based on whatever trades they receive from the exchanges, they will block the margin as per the portfolio margining rules that are prevalent. and appropriate margins would be blocked.
In the last 5 trading days.
This is a question from Manish from Kotak Securities.
In the last 5 trading days, the client put something.
And that
There is
Manish, I think
three
that's Manish
of
Joshi.
order, all-
Manish, hi, Tejas here. Yeah, what's the question? The last 5 trading days if the client puts Nifty long order.
ये सारे क्वेश्चन एक ही तरफ है कि
अच्छा,
अगर मेरा
margin-
कोई पिछले दिन का पोजीशन है
हाँ,
उसका मैं स्केयर ऑफ उसका उल्टा ऑर्डर अगर प्री ओपन में डालूं
yes,
तो उसका मार्जिन स्टेटस क्या होगा? बेस्ट ऑफ माय अंडरस्टैंडिंग वो मार्जिन लेगा
correct,
क्योंकि मैं मार्जिन स्केयर ऑफ तब दूंगा तेरे को जब ट्रेड होगा।
correct,
ट्रेड तो प्री ओपन के बाद पता
correct.
लगेगा।
So order level पे तो पहले margin sufficiency check to perform होगा. And then if at all the order is traded,
हाँ फिर स्केयर ऑफ
then trade level, हाँ,
ट्रेड लेवल भी रिलीज हो जाएगा, ऑर्डर लेवल भी रिलीज हो जाएगा।
हाँ,
तो तेरी पिछली पोजीशन पे मार्जिन लगा हुआ है तो स्केयर ऑफ करके उसको हटाना चाह रहे हो लेकिन वो तब हटेगा जब ट्रेड होगा। प्री ओपन में अभी ऑर्डर डाला भी ट्रेड मेरे को कंफर्म नहीं है।
right, that's true. So trade होने के बाद जैसे portfolio margin जैसे आज normally होता है, उसके हिसाब से margin blocking होगी। हाँ, equity segment में भी बात
नहीं होगा ना, एफ एंड में कैरी ऑन है ना। ये पे प्रॉब्लम।
हाँ, यहाँ पे क्वेश्चन लॉन्ग पोजीशन शॉर्ट पोजीशन पॉइंट ऑफ व्यू से आ रहे हैं।
ठीक है।
Okay, next question. During pre-open all orders will check for sufficiency margin. Can
वही
numbers
है
go
सब।
into RRM mode?
if number is 90%.
During pre-open, yes. Yes. That may also be possible, in which case all the orders at the member level, PM level, would be returned. Okay, next question. I think they're all from Manish.
पर 90% के आगे वाले ऑर्डर रिजेक्ट होंगे ना?
हाँ,
90 तक के तो जो अंदर आगे सिस्टम में वो
हाँ,
रहेंगे।
नहीं, अमित ये क्या question है?
Yeah, so-
Member hits 90% collateral in pre-open, then all orders there were entered and accepted prior to hitting, we to get
No,
rejected.
वो नहीं होंगे, वो रिजेक्ट नहीं। पोस्ट 90 के बाद वाले रिजेक्ट होंगे।
Any order which breaches 90 from there onwards.
Yeah, that will be-
नहीं नहीं, एक बार RRM हिट हुआ तो सारे ऑर्डर्स
आगे वाले जो पहले आ चुके हैं।
पेंडिंग ऑर्डर भी डिलीट होंगे ना?
Correct.
Pending orders will get deleted.
So this will work as per existing mechanism. There is no change in existing mechanism. So
रिस्क रिडक्शन मोड हिट हो गया तो करेक्ट, बट तो इन पर ऑर्डर्स तो सारे कैंसिल कर देगा, मतलब कोई
Yes.
रूल है।
बुक में जितने पेंडिंग
So all unexecuted orders will be cancelled by exchange when
Because उसके बाद whatever new orders are entered, they will be subject to the RRM related margin rules. ठीक है, next question.
all questions covered.
Yeah, next question is again from Manish ji from Kotak Securities. He wants to speak. So, Manish ji, you may unmute yourself.
Hello.
Yes, Manish.
Yeah, hi Tejas. Hi Omkar.
Yes, hi. Boliye.
Yeah. Yeah. So nothing. Basically, 3 to 4 questions I had posed from the margining point of view. So I thought actually along with the all guys, ICCL would also be, over here. And that's why I asked this question on the margining point of view.
Okay.
So the earlier one, like the first question, what you said is correct. Because I was having EUD position as of trade, and then I put an order. So basically, the margin will be applicable once the order gets executed.
Yes.
So that point is very clear. Now, coming to the second question, what I'm trying to say is in the last 5 trading windows, okay, members would also can put an order in the next month contract. That is a mid-month contract. Now, I give you a scenario wherein I put 2 different orders, one in the near month long and another in the mid-month short. That's a spread order, and both are orders. Now you would be checking in the pre-open session at the, for the member at the order level, the margin sufficiency. So since you would be checking at the order level, and now this is not in a calendar spread window, this order, but as good as a spread position. So I'm taking Nifty near month long and I'm doing Nifty mid-month short. That is the next month. So in this case, will CCs, be considered this is a spread order and margin would be computed accordingly, or it would be on an individual order basis, is what the query was.
At order level, it will be considered individual order level.
Individual
Once
order.
the trade happen and on both the legs, then it will be treated as a calendar.
Correct.
Perfect, perfect. So it would
That's
be a,
what, yeah, that's what we have got to understand
Because
from
in
the
the pre-open,
CCs.
in the pre-open, we are not sure na which leg will be traded or which not be. Once both the leg traded, then it will we will get the benefit. Till the time both the legs will be considered separate.
Right.
oh, so though the orders are in the spread direction, but directional margin would be applicable like on individual
Yeah.
leg is the point we are trying to highlight over here. Okay, so this is true. Now the another question, like since the orders, since all the orders would be checked for the sufficient margin at member level. Now already from 9 to 9.8 up to 9.5, all my orders are going through, and I'm not hitting at a this RRM mode. But at 9.5, say I hit 90% based on the orders. So now after 9.5, all orders will get rejected, or once the member gets into RRM mode, or even my prior open orders will also get rejected by the system is what the next question is.
No, Manish. So say for example, you have a 5 orders, you have
Yeah.
placed the 5 orders and you're placing the 6th order.
Yeah.
Due to 6th order, your margin is getting
You're hitting RRM.
hitting RRM. So your
Correct.
6th order will be rejected. Right
Okay.
now, in equity segment also the same behavior applies. So the order due to which your margin is increasing, that order will be cancelled.
Agreed.
RRM
Okay.
is totally your collateral utilization has gone above 90%. So this is not RRM. This is based on your order. CC is margining the CC is blocking the margin.
6th order, which put you in the RRM, 6th will
not be
6th onward. 6th and 6th onward, any order will be
So-
rejected. Prior 5 order will be intact.
So CC will be checking this validation, and based on this validation, they will give you the confirmation that 6th onwards you don't accept the orders.
I got your point, sir. So point is like from 9 to 9.5 up to 5 orders, it will stay remain in the system for matching. From 6th and 6th onwards, none of the
Yeah.
orders will get accepted. The moment I hit 90%.
Yeah.
I got this point. And by any chance, like, whether member would be able to view this order level margin in any of the systems of ICCL, like RTRMS or something,
Actually,
order
I-
level blocking?
not aware of whether CC is providing that front end.
Okay.
Any order level margin can be viewed in any ICCL or LCL front end.
So I think you need to refer to the CC circulars or
Okay.
check with them directly.
No problem. Because, at BOD, I may be at say 45-50%. But since lot of orders getting poured in, after getting alert message only, I will come to know that I have gone into RR mode, for example. So that's why, like, is there any chance where CCs can at least provide a view or something like that? Anyway, we'll get it checked with CC separately on this because, I thought like CCs would be a part of this.
No.
No problem. I'm through with all my questions.
All unexecuted orders.
Okay.
So there is another query from Mr. Sugumar. You may ask your query, please.
Yes. Yes, please.
Yeah, hello. Sugumar ji, can you hear me? You may please unmute yourself and ask a query.
बोलेंगे अभी तो म्यूट पे.
Hello. Sir, I think he is having some technical issue. And we don't have any other question as of now. Okay, sir. So I think we can conclude today's session as there are no queries. So anything, any closing remark you would like to share with our members?
Well, just one point. So next weekend, December compliance mock, out of the 5 features that we've covered here, 3 features are going live at the same time. Block deal related changes in cash equity segment, pre-open session in equity derivatives, and reserved option contracts on Sensex and BankX contracts, again in equity derivative segment. So we sincerely request all the members to participate. Anyways, it's a compliance mock also. So in both cash equities and equity derivative segments. And please send us your feedback at the contact details that are given in each of the circulars. So that is a request. And the subsequent mock after that, 13 December, again, we have the mock trading session related to the exchange interoperability outage event. So there again, we request all the members to participate and give their feedback.
We request to member also to sanitize their all IT, RMS and compliance team in detail about this. Because we don't know when this kind of events can trigger. These are unforeseen events,
Yes.
then they can trigger. Then there should not be a scenario, they will be looking the circular and guidelines, what to do, not to do, who can do, who cannot do. So these are the things, because in such cases, if some client is not able to do that, or we are not able to give the access to the client, the liability will fall on the broker.
Okay, one more request. As I had mentioned during last webinar on retail algo with client direct API, I would urge all members and vendors to come forward and apply to exchange for their retail algo strategies. The SEBI mandate is very clear that by November, some of the strategies of retail algo should be registered with the exchange, and in January compliance mock, all the algo strategies for retail clients, they have to be registered with the exchange. And April 1, 2026 is mandatory go live for all participants. So please expedite on this. And in case you have any queries, you can contact us. We have again reissued the circulars a couple of days back as a reminder to the market. So please adhere to it. Sincere request.
Thank you. Thank you very much.
Thank you very much.
Thank you so much, sir,
Thank
on
you.
behalf of the, yeah. So thank you so much on behalf of BSC Brokers Forum. We truly appreciate the participation from members. We have over 100 participants as of now. So thank you so much, everyone. Also, we would like to appreciate BSC team for giving such a valuable information. And we also request all our members to attend that mock trading session and outrage event. And so thank you so much, everyone. Thank you so much, Team BSC.
Thank you.
Thanks, Eunice.